All right, team. Very good morning. I hope you're all doing well. Wednesday, the 1st of July, 8:30 here, local time. Finally back home in Milan. Welcome to quarter three. So, the best, well, not so much the best, but definitely the key word that I'm taking out in terms of review coming from at least last quarter, if not the previous quarters as well, is it's unfortunately a bit of a standard buzzword in trading, but it really is accurate, and that is patience and discipline. And that's been represented over the last, I'd say even more so the last couple of weeks, whereby if there isn't the cleanest of setups that you want to be looking to take, the I'd say the guiding light would really be just don't take the position and simply wait for your better setup to materialize. Then you're able to trade with confidence. Then you're able to stack your confidence by way of EMAs, by way of order blocks, higher time frame direction. Or if you're looking to use the 15-minute time frame only and simply looking to trade the Asia range, then of course wait for the better break of structure on that 15-minute time frame that you then have the 15-minute order block down at the lows or at the highs, and you can see that you've had the break of structure on the 15-minute time frame. You wait for your lower time frame break of structure, you take the position and you manage your position accordingly. So, excuse me, as well as discipline and patience, absolutely finally, I would add in there trade management. It's all well and good having hopes of hitting those clean and long targets, one to fives, etc., etc., one to tens that I've taken many, many times in the last previous years. But of late, I would have definitely been caught off guard by waiting for those longer term risk to reward ratios based on my higher time frame bias. I've seen the price would eventually get there, but whether or not it's me that's going to be looking to hold those positions now with the volatility that we clearly have in the market, it's just one to understand that times have most certainly changed and we have to adapt our ability in trading alongside that. So that's my sort of word of the day. And I thought that to add that in first while you're all awake listening to this. And then once you're asleep, then we'll be going over pairs such as GJ. So where are we in the market today? So the DXY, we have indeed weekly time frame pushed more pretty much as we were previous live call. We are in this higher time frame order block that happened a long, long, long time ago. However, However, what we can say, good morning, Victor, of late, we have broken structures to the upside. So, of course, in terms of the immediate structure, we are DXY bullish. However, I don't believe that the DXY will just continue to push and push and push and push. I do believe that there could well be a hold up or at least a higher low to be created. If not, then of course I do foresee that the DXY will push up towards this higher time frame weekly order block that is very much so available. Unlike this order block here that has been mitigated for once, twice, thrice over, and we're now operating within the realms of that order block. Hence why I've moved it slightly to the left-hand side, just so it doesn't clog up your mindset in terms of looking for immediate turnarounds on the DXY. I think it's very clear that using now the daily time frame to the bottom right hand chart, you can see that DXY is clearly bullish. So therefore, DXY bullish. However, it's one to bear in mind that what goes up, of course, always looks to come down. And if there is an ability for us to take a short position on the DXY, in my opinion, that would indeed just simply be a higher low that's being created to perhaps be followed by a higher high. Then, with that said, if I am absolutely incorrect, I have to analyze myself in both directions. Then, what could it mean? It could well mean that there could be a bit of a free fall down towards an area that I may not really have on the chart because this 4 hour order block, must admit, hence why it's not drawn all the way across, it's in the middle of nowhere. This 4 hour order block also was not drawn all the way across because it's in the middle of nowhere. I cannot really read price action on that 4 hour time frame. Therefore, I'm using what price is doing in order to guide where I'm putting my order blocks alongside the EMAs. So the fact that price is holding up in and around this area, I'm now using this order block to understand, well, if price continues to push away from that area, perhaps then on the lower time frames, what is now being created, it is of course that higher high, followed by the higher low, followed by the potential for a higher high continuation. Now, if I am incorrect, then what this could well be is wait for a break of structure of that area in the market, pull back into another area in the market that is also keeping price to the downside for potential that free fall to maybe this 4 hour order block. And the reason why is there is no other 4 hour order block in and around this leg extension of price making that higher high on the DXY. Therefore, if price wants to come down to this area, I'll use it at least for a target. And then if I am going to look for DXY strength coming out of the market, then I'm going to need to see something first and foremost come away from that area to give me the confirmation. And then, of course, I'll be looking to utilize DXY strength from that area. And then finally, of course, if price wants to come all the way back down to the daily 50 MA by way of daily order block, that most certainly on the chart looks like a higher low, higher high, followed by potential higher low confirmed as a result of that higher high. If price wants to roll all the way back down to here on the bottom right hand chart, then of course that would make absolute sense as well, despite this being a tremendous looking pullback, if not lots and lots and lots of breaks of structure on the lower time frames. In terms of looking at DXY weakness, what we must now analyze is the higher time frame basis of that, and that is simply a higher low created after this tremendously large leg extension to the upside for a potential higher high to come out of the market. So a lot to take into consideration, but I think that price action is clearing up, as I said last week and 2 week, in fact, 2 weeks prior and last week, that you just can see a little bit more clarity in the charts. And when that's happening, that's really when I want to start getting involved in trading. When I have the confirmation and confidence in what I'm seeing, then it's very easy for me to risk money and trade those types of markets. So with that said, we've got a trading range on the 4 hour time frame, a 4 hour order block that, in my opinion, has caused an immediate break of structure on the 4 hour time frame. The reason why I'm using that 4 hour order block and not an order block higher is for the simple fact there is none higher. So if I am going to get involved in an immediate type of reversal on the DXY, to use DXY weakness as a confluence for that, say potentially taking GU or AU long position, then here is the 4 hour order block that I am interested in. Now, this 4 hour order block is available. We've had some wicks thrown to the highs, but still, I'm happy to see that price hasn't yet tapped into that area, meaning that the 4 hour order block is very much so a very nice looking trading range as a result of price failing to even push up back into this 4 hour order block. Now, when we refine that 4 hour order block down, here is the 15-minute order block refined within that area, and that is as high as I would love it to be, right there up at the highs towards the equilibrium. And that saves me in terms of waiting. Well, no, it doesn't save me, but it adds the confidence in terms of waiting for that area to be hit before then looking for price to take a reaction from that area for a potential reaction to the downside. And then, of course, I'll use that DXY as a confluence for weakness. Now, on the flip side, this 4 hour order block that price is holding from at the moment, you can see that price hasn't really started to trend towards the upside just yet. Most importantly, in terms of where we see price action and structure. So on the 15-minute time frame, of course, we have this tremendously large leg, which we were talking about, which started from way below that area. However, so we've made that high from this area. Potentially then looking for a higher low. Could it have been here? Well, we failed to make a higher high, so this can't be a higher low. Could this have been a higher low? Well, we failed to make a higher high, so that's not the higher low. Could this be the higher low? Of which we're still awaiting that confirmation, and the fact that we're still in the market to potentially gauge that higher low from that area, then it's still looking great for an area where we can expect a reaction from. Now, what I do like is this 15-minute order block again refined within that four, excuse me, 15-minute order block refined within this 4 hour order block also is still available, which I like to see, which just adds to the patience that we need to have in terms of waiting for the full confirmation from an area on the DXY that we've done our work on. Now, in the immediacy, what I'm seeing is, again, if I am wrong, what is happening at the moment? So price is failing to come deeper into this 4 hour order block, tapping into the 15. However, what I'm not really seeing is, as I mentioned previously, significant breaks of structure towards the upside for me to start dragging this order block across, for me to start using this order block with confidence. Now, it is on the chart because, as I keep saying, it's great to analyze if you're wrong. If I'm wrong and price doesn't want to come back down to this area, do I have a valid order block just here? Well, at the moment, it's an order block. We haven't had any significant breaks of structure taking price out from the most previous highs in the markets that were to the left just here. So at the moment, I'm not really convinced I should be using this order block and not the lower order block. However, if the DXY starts to push towards the upside, breaking significant points where I would be looking for reaction from, then of course I'd say, well, the break of structure has actually come from this area in the market just here. Therefore, if price wants to roll back down to that area, then of course I'm looking for rejection from exactly there, that area as well. So at the moment, it is just an order block. I will wait to see if price wants to break structures towards the upside, then pull back. Alternatively, if price wants to simply just roll back to this lower 15-minute order block, then indeed I will be looking for reaction from there. So it's a good little trading range that we have on the DXY, and we'll be looking to manipulate that trading range to use with our cross pairs that we'll be looking to trade. So on to the pairs that we like to see. US dollar CAD, what do we have at the moment? So US dollar CAD, much like the DXY, is pushing on the weekly time frame towards the upside. And I'm not really wanting to start putting in this tremendously large order block and say, well, price is in the area. That is the fact of the matter. However, that will just entice me to want to stack the confluence to then look for a short position down, which I don't believe is available just yet. However, what I will be looking to do is that it's not as if I then am afraid to take a short on US dollar CAD. It just means I don't have that higher time frame confirmation starting on the weekly time frame, meaning that I have to wait for better confirmation and confluence on the lower time frames. And it's as simple as that. So I can't even begin to start my higher time frame directional analysis on the daily time frame because I just don't see anything to the left-hand side. But if I move that out, and I'll do it live with you guys here. So I'm seeing an area in the market just here. Let's see if we can zoom into that area and look to stack or start the confluence from the daily time frame. Just a moment, because I hadn't foreseen that. So we're in and around this area. So what we have, this is in the same region as that large weekly order block. So let's see where that comes out. Perhaps we can use this area simply to start the analysis. Let's do like so, bring it over. Okay, so fair enough to start the directional higher time frame analysis from there. Price is now in that daily order book that we've seen to the left-hand side. Just to zoom out again and answer the question. So why are we looking to use that daily order block? Well, we can see price. What can we say from there? Is there anything higher, first and foremost, that could well be available within that region? So there's nothing in this area, nothing here, and also nothing that I can highlight to the left here. So this order block, if I put in a different color for you to see it, this order block, which was tremendously large, mitigated right away. So we start to move our analysis across and look for any other order blocks and voids that are in the market. So I see this order block just here, for a good example, that's been mitigated and now not available in the chart. So the only and most recent order block that's available that we can start to stack our confluence from is this daily order block just here. Price failed to tap it here as well, and now price is absolutely in the highs of that region. So, in terms of stacking the confluence and gaining some confidence to trade from an area, I have that on US dollar CAD by way of daily order block, and then I need the confirmation on the lower time frame. So, what's happening on the 4 hour time frame? And now I now must ask myself to start stacking that confirmation to potentially look for a short position. So, I recognize already that price is bullish, and I recognize that price has the ability to do something like that. So when I'm seeing something slightly different in the market, I need to answer the question, well, why is that happening? The reason why that's happening is because prices come into that higher time frame daily order block. And of course, when price gravitates into that higher time daily order block by way of daily and weekly, what you'll more likely find is a bit of a hold up and range. And what we can identify over the last couple of days on that daily time frame is indeed just that. We're failing to make significant highs in the market, failing to make significant lows in the market, and we simply have a daily range in the market. Therefore, I know that the best opportunity for me to take a short on US dollar CAD is potentially to wait for a daily candle closure below that range that I can identify on the daily time frame. Alternatively, what I can look to do is identify that range on the 4 hour time frame and wait for a 4 hour candle to close out of that region, and I'll be waiting for something similar to this. Now, the only reason why I can then look to take that position slightly earlier, of course, would be an aggressive position without a break of structure on the 4 hour, more so on the daily time frame as well. But what I'm also identifying is that 4 hour 50 MA where price is holding above. So I've got a couple of ways that I can look to gain access into that short position. I could wait for price to break below that 4 hour 50 EMA, which may well not be price actually breaking below that range. It probably would be if we get a 4 hour bearish candle closure below that area. More than likely going to be a closure below the range as well. So there's two alternatives there. Alternatively, for the third option is identify price action instruction on the lower time frame. So you already recognize that by identifying price action instruction on the lower time frame, you of course lose the confidence from the daily and the fall. That's a risk if you want to take, you're able to take it. So long as you can identify structure on the 15, so long as you can identify significant breaks of structure, and then you can say, well, at least always remember to revert back to what you'll be looking to write in your journal. And if your journal is a public journal where you have to sit down and explain certain positions to, let's say, investors why you've taken a certain position using their money, you need to have it nailed, i.e., do I have at least breaks of structure on the 15-minute time frame? And it must be clear, in my opinion, over the last couple of weeks and months. The clearer, I mean, it's basic, but it's on record. The clearer the break of structure, i.e., when you can really identify. So we have a high in the market. Where has that high come from? If you seek to see where that high has come from, you have your structure point. Once or but for the break of that structure point, you are taking an aggressive position. It's as simple as that. Now, in order to not then wait for the key areas in the market, because I recognize we're intraday perspective traders, most of us are able to identify lower time frame breaks of structure with a lot of ease. And then it's down to you to identify other structure points in the market. So it's great to have a key structure point. Let's say, for example, we wake up and we already see that price has broken that area. Price is now in and around this area on the next day, for example. Identify that key structure points are broken. Identify price is now returning back to where that structure point has been broken from. Is there a 15-minute order block there? Entry criteria, take your position. Simple as that. Alternatively, that seemed to be a key word today. Structure on the lower time frame. So we have 15-minute, what's going on in the immediacy. So you can forget about what's happened previously. That remains as a key structure point. And until price breaks that area, it's just the simple fact that it is an aggressive position. Now, we're happy to take aggressive positions, but they must make sense. So therefore, had that high in the market that we've spoken about. So we recognize that until that higher low has been broken, we are indeed bullish. Now, if we start to revert to a bit more of an intricate breakdown of structure, we can say, well, a high has been created. We are waiting for a higher low for a higher high. We attempted to make that higher high. We failed to do so. And on the way down, we've then started to break structure points that were printing higher highs, higher lows, higher highs. We came in for a higher high. break of structure. Where did that occur from? 15-minute order block that's available. Here becomes an aggressive type of position. Now, US dollar CAD, for us to take that, then my highest degree of recommendation would be to have a look to see what the DXY is doing first and foremost, because if the DXY continues to push bullish, then of course US dollar CAD is also going to continue to push bullish, and your entry is simply going to be wiped out, as price would then make a higher high. And what we must then do is ask ourselves, well, I've taken a short position and I've been stopped out. Why is that? Well, we already recognize that an aggressive position has been taken. We already recognize a key structure point hasn't been broken. Therefore, we are waiting for that higher low in the market to be created, wherever that may be. It could be here, and price is simply just hanging around the area to make that higher high, to potentially make that higher low for that higher high continuation. So we must always, always, always analyze what's going on in the chart and understand sometimes why we are wrong. So before you take the position, understand what type of position you're taking, understand the reasons why you are still looking to take that position, and if you're comfortable with doing so, then take the position. It's as simple as that. So US dollar CAD is not a favorite for me, but I like the elements that are on the chart. I like now that we have this daily order block. I like that we have a hold up on the chart. So it's telling me to do one of two things: aggressive position or wait for the most conservative position. So at the moment, based on what I see across the charts, currently I would be looking for at least a break of that 4-hour 50 EMA on the 4-hour time frame. And it's one of those, when you're back testing your a certain strategy that you're looking for, you're always happy to wait for that break of structure. However, when you're trading live, for some reason, I'm seeing that traders are failing to wait for those breaks of structure, taking aggressive positions, and of course, wondering why they've been stopped out. So that would be the reason. So if you're back testing, simply use trading live as a very easy way to trade your back testing. Because you just have to wait. It's as simple as that. So what I'll do on US dollar CAD first and foremost, I'll put an alert coming up into that 15-minute order block that's available. I'll also put an alert in terms of the structure point, because I'm very happy with taking breaks and retests of structure points. And what that break and retest will not be, however, it will not be a break of that range. It will not be, more than likely not be, a break of the 4-hour 50 EMA as well. Therefore, again, it is going to be an aggressive type of position based on the higher time frames, but we then have the 15-minute time frame only that we're looking to use. Whether or not this is an Asia range position, I don't believe that it is. If we had broken structure points via this push just here, and then we had Asia available like that, then absolutely, I'd say we've had a break of structure on a 15-minute time frame that I'm happy to consider. Asia is available to the lows just here, 15-minute order block above Asia that caused that break of structure, lower time frame break of structure, and I'm in the market to take a short position. No problem whatsoever. Now, in terms of US dollar CAD, that's exactly what I'm looking for. I'm not going to be in the market for a long, despite what I've said in terms of price is, of course, bullish. And the reason for that is because I've now recognized we are in that higher time frame daily order block, where, of course, my anticipation is price to come out of that to the short direction. And I don't have enough range, i.e. price isn't here for me to short up into that daily order block. It's the mere fact that price is operating in that daily order block means that I cannot take a short, a long out of that area. So very much so sell bias. Just have to sit down and wait for, or not, certainly not going to be sitting down. I'll just be getting on with my day. With my family, and then if an alert goes off, reanalyze the market, take a look at the DXY, and then off we go to the downside if it makes sense. That's US dollar CAD. AUD USD. Where are we? Let's zoom out of the weekly. So weekly time frame. Don't mind AUD USD at the moment whatsoever. Um, it's becoming a pair that I feel like I'm a step behind, but I'm not. I'm just waiting for my entry to materialize. And sometimes it does feel like that. I was waiting for shorts for it feels like months up here. Managed to grab a couple of them, but not to the extent that I thought that would have been available. Now prices come into this weekly order block that I must analyze and say I have to get rid of my thought process previously and understand that we've had that high, higher low, higher high in the market. Where did that high come from? Here is the weekly order block. Price now in and around the area, supported to the upside by that weekly order block. Got a good amount of confluence already just by way of the weekly time frame. So that's looking good. However, as I always say, we don't trade from weekly order blocks. We refine, refine, refine down daily 4 and 15. And then we're here within this daily order block. That also, if we look at price action in its most basic format, we have a high in the market. Where'd that high come from? Somewhere around this area. Can I locate the daily or the order block that caused that break of structure? Yes, I can. It's the only order block available down the lows. Here it is. And where's price? It's there. So we're doing a good job by way of refinement. The only caveat to that is what is price doing now? As an intraday perspective trader, I must understand, despite my higher time frame directional bias, I keep saying it, team, and it's going to get boring to hear it. But despite where I may believe price is going to go based on my technical ability, it doesn't mean there is a position available. It really, really doesn't. And I really hope that that message is coming across. You may be the best technical analysis with a T at the end. However, it doesn't mean you are the best trader. You must understand that your analysis is one thing, trading your analysis is another, and that is by way of awaiting your setups, then having your entry criteria, and then all the other trader elements by way of patience, trade management, discipline, when to look at the DXY, what's the DXY doing, what's the performance of the DXY against the position that I'm looking to take. So if I'm looking at taking an AU long position, I need the DXY to give me signs of by which it is weak. We are currently kind of there with the DXY, but not quite. And we get that supporting evidence by the fact that AU, is it there? Can I hand on heart say that AU is bullish now on the lower time frames and it's ready to go long? Well, first and foremost, what I'm seeing in the market is unfortunate. Here's a low in the market that's been created of most recent price action. So I get it. Price has dumped quite a far distance away from, let's call it key structure points up here or even higher, but play the game with me. Of late, of course, we've come into that higher time frame point of interest where we're looking for price to move towards the upside, but price is bearish. We've got a structure point in the market by way of 4 hour time frame where price is clearly failing to break above. And what we've had is price come down. We can't call this a lower high at the time, but price has now made a low. Price has come back in. We still couldn't call this an area in the market where I'd be happy to short from, in all honesty, based on higher time frame. 15-minute analysis, slightly different. However, what we're seeing in the market is now a low created, which then confirms this area as a structure point. And I hope that makes sense. Once the low is created, seek to move back your analysis and understand where has that break of structure taken place from. If there isn't an order block, as I don't have at the moment, I could put one in just a moment, which has been mitigated. It's a structure point. So until that structure point is broken, we are bearish on AU. Until that structure point is broken, I am taking an aggressive position. Simple fact. If you're not happy to take an aggressive position in trading, then you must wait. 4 hour 50 MA. How's the performance acting? It's keeping price to the downside. Therefore, if I am going to look to take a position, I must seek to manage my trade by that 4 hour 50 MA as is currently, because price is being held to the downside. Price is rejecting it. Therefore, if I'm going to take a long position, price has every reason based on previous history to look to reject that 4 hour 50 MA. Now, if price then breaks that area, this area, what I'm talking about, as well as breaking the 4 hour 50 MA, completely different ball game now. We have now broken structure to the upside. This structure point has now been broken. 4 hour time frame now looks bullish based on what we're seeing now. Break of the 4 hour 50 MA, therefore, is no longer a target. We're now using the 4 hour 50 MA as a confluence to take the position towards the upside. And with that all said, What we would clearly have would be synchronization on that 15-minute time frame. We'd have something just like so, with price printing towards the upside. We'd be waiting for price to roll back down towards a 15-minute order block that's caused a break of structure. Look for your lower time frame break of structure if you're so pleased by entry criteria, and that's the position. So in terms of produce a course, Charles, I need to know exactly how you're trading. It's here every week. The breakdown doesn't change, and until my performance dips to, well, I don't even know what it would have to dip down to for me to really, really change the way I trade. I've been pretty comfortable trading this direction for around about 6 to 7 years. And of course, it has its ebbs and flows like everything in life. And we have to understand that price action is just a representation of emotions and, let's say, manipulation. However, these candles going up and down, it's just emotions of traders taking profit, emotions of traders entering trades, and of course, people losing money as well. So, therefore, let's not get caught up in the emotions. Let's just stick to a very clear trading strategy, which is higher time frame point of interest. Refine the area down. What's price action doing in the immediacy? Am I taking an aggressive position, or am I taking a position based on the fact that price is now trending in my direction of travel? I now see that I can only look to take long positions here on AU, unless it's an Asia range type of position to the downside. And what I do see is if price, well, it's now gone, to be quite honest. Price broke structure to the downside, breaking structure to the left. Where did that come from? Here's the order block. Price came in. I would then be looking to fill Asia to the lows. It's no longer available, unfortunately, because we've got a new Asia range here, and that order block has also been used. That's the most important. That order block's been used. So no Asia range towards the downside for me, unfortunately. However, what I could, and this is what I said to the start of the call, Asia range positions. Do we have a break of structure? Yes, we do. In terms of price made, we can say we had a low in the market created. So here was a key structure point. We then came back up and made, let's say, a lower high, looking for a lower low. So actually, in fact, I don't have any breaks of structure to be looking to take. Excuse me, I'm looking at that in the opposite direction. We had a low in the market now that has been created. We can say, well, where did that low come from? What we'll do is we'll start the process here, low in the market. We've had the push towards the upside, breaking structure to the left-hand side. Also to the left-hand side here, is there a 15-minute order block that supports that break of structure, or where we can hang our hat and say that break of structure on the 15 came from this particular area, refined down to a particular order block? And here we are. 15-minute order block. Now, is Asia available to the highs? Yes, it is currently, of course. London has only just opened. Therefore, if price wants to come back down to this area, I have an option to take an Asia range fill position towards the upside. Nevertheless, what would be better is we have this, a clear break of structure points to the downside. Then we had the order block and then the same looking criteria. So again, in your journal, if you're going to take this type of Asia range position, you have to put down the difference. You can't just say Asia range, Asia range. There are differences in that Asia range. We don't have the cleanest and clearest break towards the upside, then pull back. Of course, we do have immediate breaks of structure points, and neither or are incorrect. It's what you're comfortable to take. I personally would look to avoid that type of Asia range setup because I don't even know, well, Asia range is not defined by your higher time frame analysis, but I have seen clear Asia range setups, and I've seen those clear Asia range setups work very nicely. So therefore, for me, when I'm seeing this in the market as a structure point, and when I'm not seeing a 15-minute candle close above that area, then for me, I'm thinking, well, why take that when you know the cleaner ones can be shown in the market? And it's as simple as that for me. So I won't be looking to take that Asia range setup, despite it being an Asia range that I have taken previously, and I have made money using those particular types of Asia ranges. But I'm in the markets to take good positions and great positions, and this would be a good position. But when you know that great positions come up, well, just depends on how you feel on the day, to be honest. You don't have to take everything that shows up in your direction. And that's just the way I'm feeling at the moment on AU. I'd much prefer to wait for a higher time directional trade on AU. I've got lots of room towards the upside, where I do see a potential hold up towards then the downside. And yeah, I think AU looks quite nice for higher time frame directional trades. I'm just going to wait to see what price action will do on the 4 hour time frame. Currently in a range, you can see that on the daily time frame as well. And I think that's a good looking position to wait for. And that's what I'll be looking to do. So that's AU. Blimey, I'm going to have to go through these a little bit quicker so you guys don't all fall asleep. EU. So what we have with EU, price is of course bearish. So of course that's now looking to roll against our thought process for potential AU longs, but AU longs aren't ready, and we recognize that, and we recognize also that higher time frame wise, or at least 4 hour time frame wise, we are still bearish if that's going to load because we haven't broken that structure point towards the downside. So we do have that synchronized, and let's have a look to analyze EU as it stands. So again, a couple of nearly areas on the market as a result of price just rolling from a position, from a point in the market. I'm seeking to understand why price is holding up in this area. Therefore, as a result of price rejecting this area, I've brought the order block across, and I'm trying to stack my confidence by way of potential shorts from that area. So I've got the 4 hour 50 MA that's doing a good job at price being rejected to the downside. So of course, if price wants to come back up into that area, I'm going to expect somewhat something of the same. I think there could have been a position on AU over the last, excuse me, EU over the last couple of days, which I didn't take, in all honesty. So we had that 4 hour order block there. We didn't really have the certainty to take the position from, especially from here. No breaks of structure on that 15-minute time frame. The first thing that I'd be looking to analyze would be this area in the market that caused the most recent push towards the upside. And here we have that push up. Therefore, I recognize that that as a break and pullback would be the best looking trade. So therefore, there was no short position for me just yet on EU. However, as we start to roll across, I'm seeing something similar to this, just an area in the market where price is, of course, faded to break below. And what I've done, I've put my structure point just here as a result of seeing a push towards the highs that broke structure points and broke structure points, but still remain within that 15-minute order block. So I'm giving myself a bit more of an opportunity by allowing a sooner rather than later break of structure. But let's be honest, if price breaks this structure point, probably going to break this area as well. I'll then wait for a pullback and I'll look for a short position down. So I think that's a half decent looking position based on 4 hour and 4 hour and 15-minute time frame only. And then of course to support that, there isn't much by way of daily. We've got a daily order block in here, but there's no real reason to put that daily order block in the charts. I can quite clearly see that we had a low in the market, lower high, lower low. So here should be where I put my order block, not anywhere sooner. Therefore, what I'll be looking to do is revert to just intraday perspective trading for that. And we have a 4 hour point of interest in the market, supported short 4 hour 50 MA, refine those areas down, and then it's imperative when you don't have the support of your higher time frame to guide you, you seek those breaks or structures. So what I'll do is put an alert here, price crossing down. I'll put an alert when price wants to come back up to that 4 hour 50 MA. And then of course, if price comes back up to this 15-minute order block before breaking structure, it's going to be a no trade for me, because we don't have a break or structure. In fact, I won't. Yeah, it's going to be a no trade for me. I want to see a break of structure, and it's as simple as that. What you are, of course, able to do is take an aggressive type of position, but for me to take an aggressive type position, what I do prefer to have is higher time frame backing on my side to actually support my reasoning for wanting to take that. Of course, we got that session high in the market, but from that session high, we're not really seeing much. If I did have, let's say, if price then came back up into that area and smashed below this area on the 4 hour, then came back, then perhaps I'd look for an aggressive type of short position down. However, we don't have that. What I could even argue the fact is that's developing. And therefore, when that's developing and I can see it happening, I'm not really in the market to take aggressive positions. And would that make sense? I'd say so. Look, we have an AU. We don't have a daily order block to support that area. But if EU and AU are correlated to some degree, and we're getting a hold up on AU, then would it not make sense to also have a hold up on EU? And I think that's what we have developing at the moment. However, break of structure short on EU, I would indeed look to take a nice looking short position. It looks good, right? Price overall trading to the downside. Key structure point in the market, price is favored to break above. All I need is a break of structure pullback, and I'll take that as an aggressive type of entry. But it's going to be a very conservative looking setup with an aggressive entry. At the moment, I don't really have any full reason to take that position. Price came up, and I really expect them price to break those structure points from that higher time frame, well, from the 4 hour 15 refined area, and by way of it being a key structure point. We don't have that. Therefore, I want to wait for something. And I think that's fine to do so as we start to move forward. As I mentioned in the first pretty much minute of the call, patience and discipline moving forward. With patience and discipline, you can't really go wrong. In fact, you cannot go wrong. So long as your patience and discipline is in line with your strategy, you're always acting correctly. And that's what we're seeking to do. Act correctly by way of our standards that we've set. Therefore, I can do no wrong, right? And that's how we're going to continue rolling into Q3 and 4 and into the next year. GCAD, GCAD. Again, you can see immediately on that 4 hour time frame, hold up. Not that they're correlated, we'll take it as a separate entity, pound CAD, but we can see it here on the 4 hour. So you guys already know what would I prefer to wait for. There's nothing going on the time frame. We can see that GCAD can trend, so we must understand, well, it's not trending at the moment. Look at it. Um, I want to make these points for you guys so you can understand what I'm talking about. We can understand the performance of a pair based on what we see. GCAD can make higher highs, higher lows, higher highs and higher lows and higher highs. So the moment I see a pair not trending, for me, it signifies a couple of things. It signifies, well, perhaps we are at the end of a trend. Then when we have that married up to the higher time directional bias, that the fact that if I scoop this over, you can see that we are operating within the realms of a daily order block where price came, well, we didn't, well, we have it. We had price held up, came in, broke structure. Where did that break of structure occur from? Here's the order block. Let's move to the active trading scenario. Where is price? In the area. Now, price is in that area. We have the hold up, much like on the previous pairs that we've discussed. So what's the best thing for me to do? I can identify, I can take an aggressive position based on the fact that structure points may or may not be broken on the 4 hour time frame. The best thing that I recognize I should be waiting for is the 4 hour time frame. I see the hold up on the 4 hour, so wait for the break on the 4 hour. Also, we have the performance of the 4 hour 50 MA where price is being held to the upside currently. The reason why I would be inclined to take an aggressive position here is because I can see I have room down to my most limiting factor on the 4 hour time frame, which is that 4 hour 50 MA. So if I'm anticipating price at some point to break that area, that would be for me to gain access into that trade by way of it being the best looking setup. I recognize that I have a potential to take a position down to this area before the rejection back. Or if I'm lucky and price does what I would love it to do based on my forecast, I could be in the realms of taking profits and then price actually coming back, giving me access to an aggressive position first and foremost, and then the better position when I have that break of structure. Now, I'd be happy to take that because the 4 hour 50 MA isn't here. If it was here, then I have no range. Look at the 15-minute time frame. I can't short here to here. The difference I have now is the 4 hour 50 MA. It's in a half decent position that allows me to take a position where I can then expect reaction. Of course, I can have reaction sooner than that by way of the 15-minute time frame, by way of the fact that the price could just reject that range. Because me taking the position, what you have to ask yourself is, okay, price is ranging. So if I don't have a break of structure and I take a short position, let's say I take a short position now, why is my position so special that the range now will not, or excuse me, will be broken? Until the break has actually occurred, you must just use what's going on with current price action. Price is in the range on a 4 hour time frame. So me taking a short doesn't mean that's going to happen. It just doesn't. We have to be factual. We have to be true to ourselves and understand what's going on. There isn't a trend towards the downside on the 4 hour time frame just yet. We also must understand that there is not a trend on the 15-minute time frame, despite us wanting to take shorts based on the higher time frame analysis. We just have to understand it and understand that a position that we take currently can only be an aggressive position because we do not have structure on our side and we do not have any significant breaks of structure supporting and actually telling us, right, now I should be shorting. In fact, it's the opposite. If I was going to hedge, forget order blocks and forget any, if I was to clear this chart completely, what I'd be saying is, well, higher high, I'm waiting for a higher low for a potential higher high. The reason why I'm not doing that is because I'm focused on my higher time frame analysis and I understand that I am in a higher time frame order block, whereby for me to have an opportunity that makes sense based on my analysis is I will only look for short positions until I have a break above that daily order block. I know it's the weekly, but stay with me. A break above that on the daily time frame, and then I can clearly say daily is now broken structure points to the upside. We've made a high, searching higher low for that higher high continuation. Now, the fact that I always say, well, I could be wrong, and I don't mind being wrong, so long as being wrong makes sense. I could even say, well, why don't I look for a long position based on 15-minute only? Well, for me to look for a long position based on 15-minute only, guess what I need to see? 15-minute breaks of structure. And I see order blocks that I would be looking to short from. Therefore, I haven't called these structure points. It's as simple as, well, if I get a 15-minute candle close above that area, I can now say, well, structure is actually supporting me lower time frame, long. What I would need to do to support that is, of course, see a 4 hour candle also close above 4 hour order block and 4 hour range. And therefore, that allows me to be in the market to, let's say, take a 50-minute time frame trade only if it's an Asia range. I won't be taking anything else other than that. So do I have an Asia range available? No. Therefore, I will not be looking for long positions. It's short only for me until price tells me otherwise. So what I'm looking for, break of structure, pull back. Here's my order block. It's available. And alert to go off. Entry criteria going to be as simple as shorting from that area. That's it for GCAD. Don't mind GCAD, very simple to analyze. UJ, probably going to skip that to be honest. Um, we're just pushing, pushing, pushing. Well, what I can say for UJ is I believe that a reversal is, I won't say imminent. I don't know when it's going to happen. But based on the DXY, I just feel like there should be a pullback on the DXY. If there is going to be a pullback on the DXY, then perhaps there will be an opportunity to support US dollar JPY shorts. However, based on really what's going on, does it make sense to look for shorts? The only reason why I'm looking for shorts is because price is in that higher time frame weekly order block. Now, granted, weekly candle is printing above, but it's only relevant by way of when that candle closes on the weekly time frame. So although price is above it, I would expect that by the end of the week, and I'll draw a candle, we have a weekly candle that looks somewhat like so. A wick to the eye, rejecting the weekly order block, and price doesn't close above it. Of course, if I'm wrong and the order block doesn't play out, we have a weekly candle close above that area. Of course, next week I'm higher high, higher low, higher high continuations. Simple as that. But until that happens, I must revert to being sell buyers based on my higher time frame directional analysis. And if it doesn't make sense to take shorts, from what I can see, I can't really identify an area on the chart where I could even call structure point. Okay, I could say here. That's I mean, I wouldn't say that's far-fetched. I mean, that is just using your opticals and understanding, well, prices push from that area, and I'm going to call it a structure point, but I really can't be sure. The only way for me to be sure is as I've drawn it down, key structure point down at this lows, which most certainly caused a push from the upside. But if I'm going to be looking to take a reversal type of position, I'm not going to be waiting for that and then that and then that. Of course, that would be the best, but I understand by the time price comes back down here and price then comes back on its way up, for me that would be the DXY making its high after this higher low created DXY. This now would be the higher high being looking to take on the DXY, meaning that any positions that I take from this area based on breaks of structure pullbacks, I think they'll be wiped out pretty much straight away. And that's how you use all of your analysis to understand, well, what's going on the pair that I'm taking. And you might say, yeah, well, Charles, you've had your breaks of structure, you had the break of the 4 hour 50 MA. Yes, but what's the DXY doing? The DXY is already telling me higher high, higher low. So if I get a higher high, higher low on UJ, a cross pair that is pretty much controlled by the DXY, then this short position wouldn't make sense. I recognize for me to look to take a short position, I need to be aggressive. If that aggressive position doesn't make sense, well, guess what I'm not going to do? I'm not going to take the position. What I could draw on for you is, let's say, because I like doing things like such with illustrations, how would I take an aggressive position? Well, I need 15-minute price action to develop first and foremost. What I can do in the market is if I place a 15-minute order block here in the middle of nowhere, absolutely no right to be there. But what I will say to myself is, right, break here, at least first break there, then pull back, then give me something from the area, then pull back, and then I'll take a short position. It's still so aggressive because you have no confirmation that price is really bearish at all. You won't have it on the 4, you definitely won't have it on the daily or the weekly, but what we have is we're using the higher time frame weekly order block to understand that we're in the market for shorts only at the moment. Now, once I have price starting to develop to the downside, then of course I can look to understand if there's nothing else available, then perhaps I might want to take that position. But at the very least, I need this area to be broken, a random area in the market. But it makes sense based on order blocks because let's face it, if price comes down to this area, what would I be expecting based on order block? I would expect a reaction, if not a higher high from that area. So if I fail to get a higher high, price then comes down and starts breaking immediate structure points that printed on the way up, then perhaps I'll be in the market to then look for a short position like so when price comes back down. But until that happens, absolutely not. No, thank you very much. So that's UJ. And can I get in the market for a long? Honestly, can't, to be honest. I don't really have any areas, just like I'm looking for areas to break on the downside by making them up. For the long, it just seems quite difficult. And also for me, I'm in the weekly order block anyway, so my eyes are very much so gauged towards shorts. And there is no reason for me to look for long. So when I'm like that on a pair, it's just so easy to look for one direction only. So that's you, Jake. GU, almost there, team. GU, GU, GU. So what do we have on GU? GU has, yeah, that's what happened with GU. So unfortunately, yeah, it is unfortunate. We had this daily order block here that caused a break of structure on the day on the daily time frame. Very subtle, but it did it. We have it just here like so. Where did that break of structure occur from? Just here, there's a daily order block. Come across, was looking for a rejection from this order block to take it towards the upside. Unfortunately, as I've said, we've had price break below that daily order block. So technically, I should be taking it off the chart. Now, what I'm doing, or what I've done rather, is I've used this wick imbalance to understand, well, if price doesn't respect my illustration, does it mean that I'm wrong? It does, but would I be willing to give price action another chance? Usually I wouldn't, but it doesn't mean because I'm going to give the order block a chance. It doesn't mean that I'm going to be looking to take immediate long position. It just means I want to see what's going to happen because I can't take a short position anyway because I'm in the market based on the higher time frame, daily order block. I'm in the market for longs. And I have this wick imbalance also that I've drawn across. And if it makes sense, I'm going to use it to my advantage. We can see that wick just here. And why didn't price break it? So perhaps the order block was mitigated. Yes, it was just ever so slightly, but price respected that wick imbalance. Now, again, I need price to develop dramatically for me to take that take a long position from there. And I'm not so much only gauged towards long positions because we've had that break. So what I will be doing is understanding structure points in the short positions and see if I can get reactions from those areas to potentially take a short down. Because in my journal, I will not be shorting into a higher time frame order block that is valid. It has been broken and closed below. So I now have the option to trade both ways on GU, which I'm happy to do on this occasion. Now, structure points to the downside. What can I see? What's price action doing? What's the performance? Low in the market, lower high, lower low. That was the break on the daily, lower low confirmed. So it's telling me something. The Price is telling me something that that daily order block may not be the one. It could well be the daily order block below. And if I zoom out on that daily time frame, this could be the order block that price is wanting to gravitate towards. So I'm not going to be sucked in immediately to taking longs. I will use the information that's been provided by whether the candlesticks in the chart and understand this breaker structure on the daily. Therefore, coming back up, can I understand that there could well be a short position to come from the area? I was excited to see it. Unfortunately, it's just a structure point because I don't have any order blocks to support that short position down. If I was going to put an order block in the market here, let's just play the game. It's been broken above. That doesn't mean I'm now looking for longs. It means that structure there is no order block. So I want to see one created. So let me move towards most recent price action. Order block, again, the order block hasn't done anything, but it's at a structure point. So I will put it in the market to understand if price wants to come to that area, I have confidence to take a position from that area for the short position down. Now, on the 15-minute time frame, here's a bit of the conflict. If I zoom out like that, look how beautifully clean this trend towards the upside looks. I'll draw it on as an illustration as well. So price was making lower lows, lower highs. That's confirmed by way of this lower low. Now, of course, as a result of a lower low in the market, I'm now in the game to look for lower high, lower low continuation. But then we've had break of immediate structure, high, higher low, higher high, higher low, higher high, higher low, and higher high. Back into that structure point. So it's a bit of a conflict, but what it's telling me is wait for a break of structure in either direction, take the trade. Simple as that. And I'm sorry to make it sound that simple, but it really is. So price action on 15 is printing me higher highs and higher lows, meaning that I should be in the market for higher highs, higher lows, higher highs. However, I have no real reason based on what's it, higher time directional buyers to look for a long position from here. But what I am willing to understand is if price breaks that area and pulls back, then I'm definitely in the region of looking for short positions based on the fact that what we've just explained, 4 hour low, lower high, lower low, 4 hour order block synced globally. Let's see if there is an area in the market where I could potentially look for a short position in and around that in terms of refinement. So where are we? Up at the highs, hopefully. Here we go. Not within the order block, but I don't mind when your refined order block is, oops, what have I done? Refined order block is above because it kind of adds a bit more confidence, I must admit. Because when the 4 hour candle starts to come in, we're looking to reject the 4 hour order block as well as then looking to reject the 15. So we'll reject the 15, close out, and then we've got 4 hours to reject the 4 hour order block, print bearish. So I really like it when the formation is like that as well. With that said, I could be wrong. Price may not want to gravitate towards that order block. It may want to gravitate to an order block that's actually refined within the area. Therefore, I've got two nice points of interest. Therefore, when I have a couple of points of interest refinement, I got to wait for something different. So my highest area, this is going to be my aggressive, probably going to be a, should I drop the comment? Yeah, there's no reason why that can't be a limit order. So long as price seeks to break these immediate structure points, and I'll look for a limit from here. And then from this order block, then I also will look for a lower time frame confirmation and then look for a short down like so. I like GU in terms of the shorts. Now, would I take a long from this area, potentially based on Asia range setup? Why? So Asia range, 15-minute time frame only. Do I have a break of structure? I indeed do. I have a break of structure. All these points here, break of structure here, and most importantly, key structure point, break of structure to the right-hand side as well. Can I identify the 15-minute order block that created that break of structure? Absolutely, yes, I can. It's here. It's the only 15-minute order block available. It's below Asia as well. Therefore, the first element for me to identify is, do I have the range to take a long position back up? Potentially not. So this might be a reason why I don't take this position because my range is a little bit too small. Look how I'm going to have to manipulate my stop loss to get a good risk to reward ratio. So I would like to put my stop loss here. So in an ideal scenario, my Asia range would be a lot higher, like so. And then I'd be able to do that and have a stop loss that I actually like. So therefore, Asia range is available, but if I was going to take it, I need to manage it pretty aggressively. And am I willing to do that? Yes, I am, to be honest. But what I need to have is a lower time frame, 1 minute break of structure coming out of that 15-minute order block, and then I'll look to take price at least. Well, the strategy is take profits by Asia range, whatever that may be. If it doesn't make sense based on risk to reward ratio, then don't take the trade. Absolutely not. So that's GU. Um, Asia range longs, high time frame directional trade shorts, and I think that makes pretty good sense moving forward. I'll update you guys throughout the day with GU. What else do we have? GJ. What I'll do, I'll skip GJ actually. I think there is more than enough on the charts for us to indulge in good looking trading opportunities, I'd say. And I wish you all a successful quarter 3 and good trading day, team. Victor, thank you very much for joining. Appreciate your attendance. Good to have someone that I can speak towards as opposed to just myself. And everyone else in the recording, I hope you're all doing well. Take care, and you'll hear from me soon. All the best. Charles.